outline of what I was going to cover: high, low, time of day, intraday trading, some of the stuff that I've been doing, the K-stochastic, using some options, and then some issues. So this is hopefully where Richard can help me with some of the issues that I've run into over the course of trading. And I do all automated trading. So anyway, so let me start. This is a SPXL, and what I was observing is that you get these peaks here. Can you see my cursor here? It's like somewhere just before 7 o'clock. There's a peak in the value in the price action. Here's in the first 5 minutes, you got the low in the price action, right? So it's like, hey, there may be something here, something I can do with that. And if I could find enough stocks that take off, go up or go down after the first few minutes, that would be a good thing. So I created a analysis, which was take a look at SPY and take a look at a histogram of when are the peaks and the valleys. So the maximum time, the maximum value, the maximum time, maximum price of the day is in blue, and the minimum time is in red. And so this goes and looks for the last 2-3 months, and it says, okay, there were seven times when it happened in the first 10 minutes. So this is a time of day. This is 6:30, 6:40. So it goes in 10-minute increments all the way up. And so you see that there is a little bit of a bias to saying, hey, this is the high or the low point of the day in the first 10 minutes of the day. And then of course at the end of the day, there's a bias too, right? Right before the close, you see that, oh, it's either the high of the day or the low of the day. So I was trying to figure out strategies to be able to do that, to be able to leverage on that capability. So I created a so let me go back up here a little bit. So playing to Richard's comments about using radar screen, I created a thing called K-trend. And so it'll do a sort, and it'll tell me if there is a trend going on during the day or early in the day or not. And so this thing says SMG was trending, and it was trending up. If it's red, it says it was trending and trending down. Now, for me, the definition of a trend, I'm going to expand this a little bit here. This is a, I got to pull this down a little bit to see this here.
And guys, pay attention, because this is a perfect example of a way to use radar screen to help you trade. I love it.
Exactly. So, so what I do is I have a little indicator that says if you see something that is within this band, don't trade it. You know, if it stays within this narrow band, don't trade it. Don't bother trading it. There's not enough action. If it breaks out of this band, okay, this is something you want to do. You want to be able to actively pursue that. So one of my problems is that I get so many of these opportunities early in the day that it's difficult for one person to set up all of these possible trades. But I do it, and I get some pretty decent returns. Here is a SMG, for example, and I have a strategy that looks at the first. This one here, I think it's 10 minutes. Let me see here. Yeah, 5 minutes. So this one looks. If you can look at this tiny little number up here. This says looks for 5 minutes. The first 5 minutes of the day. At 6:35, it makes a decision. If it's above the open, orange is open. If it's above the open and it's above the high of that first 5 minutes, it says go long. And sure enough, you get these little signals that it did indeed go long. This is the profit and loss here. This is the P&L of that position. And then here is the equity. So this thing is throwing about $10,000, almost $10,000 at it. And then it goes into a trade and it gets out of a trade. Gets into a trade and then just keeps on, stays in the trade because it's trading about a individual line. And so what I've done in the past is when I started this whole thing, I just said if it goes above the open, go long. If it goes below the open, go short. And I've had it about 10 years ago. I had this thing going up and down, up and down, up, and I made 50 round trips in a day. And the only thing that was costing me was basically the commissions because it's trading about an individual point. And it's amazing with 1 minute bars with something that has somewhat like some liquidity. Sometimes you make $1, sometimes you lose $1, make $1, lose $1. So through the period of a day, I think I lost that 50 round trips. I think I lost about $80 or something like that. So this is one of the things that I've been doing during the daytime. It's very entertaining to watch. However, there may be something. Well, here also, let me do that before I do that. Here is, it not only goes long, but it'll also go short. So this particular case, we had a Walmart situation and Walmart shot down and, so you make profit on the downside. But you can see the number of times it went in. It went in with $6,000, got out $6,000. Went into $6,000, got out, in, and it just basically stayed in the rest of the day with a $6,000 of capital, if you will, but it's going short. So the strategy, all of these strategies, by the way, are available if you go to ken.excess profits. This is on the bottom here. If you go to ken.excessprofits.com, too many S's, you'll see the strategies. And the strategies are all available for free. So Richard, you can include these in your classes, anything you want to do. Here's TradeStation code. I've got all of these things that I'm going to be talking about here today are all included, all inclusive for one low price of $0. So you can download them at your will. But then, so I'm getting all these trades are going up and down, up and down. Well, it turns out when you start throwing a lot of money at it, $5,000 isn't so bad. You start throwing $50,000, $500,000 at some problems here, and you start pushing the market. So I had to come up with something better than that. So okay, so let's see, trading management. Let's see, I'm just making sure I'm staying on schedule here. Radar screen. Oh yeah, so the sort thing was what I was talking about and emphasizes Richard's thing. I do sorts on a whole bunch of different things. This particular trend from the time keys off really, really well. I've just historically found that there's if it stays within about a 0.5% or 1% move in the first 5-10 minutes, it's not moving. And you'll see a lot of these other things like BABA here. It stays within the channel. So here's this channel, and it's like it's not moving. It's not moving to make any kind of money. And this becomes extremely important when you start dealing with options. And I think it was Richard. Was it Richard or Ron was talking about day of expiration options? And that's what DOE is, day of expiration. So I have been trading day of expiration options. Is it a gamble? I'll let you decide here. Options directional. Oh, not that one yet. Okay. So what you can do is you can start using a trend line. So people were talking about a trend line. You can say, okay, I've got a trend line that's going down here. I can see the thing's pulling back. And then when it finally turns around and comes back up, I want to get into the trade. And so that's exactly what this does. This strategy, and you'll see it again on my website there. You can get to download the code. It interacts with trend line, and you basically tell it what trend line you want it to do. If you want it to do trend line 1, 2, 3, or whatever. I always go to trend line number 1, and I see a nice fall, a falling edge, right? So when you see the time of day and you start seeing something fall down, you start saying, okay, let me just draw it here. You see a trend going down. It's like, I got something breaking down. It looks like it's something worthwhile. So I'll draw a trend line there and set the strategy, enable the strategy. And then when it actually kicks, you got a really nice pop. So it's like when it pulls down really fast, it's like stretching a rubber band. And invariably, it shoots up. And also, if you look at a lot of these other signals, if you trade about a trend line, trade about a price point, it's going to go like here. It's going to go in, it's going to go out, in, out, in, out, in, out. Well, I like low drawdowns. And no drawdowns is the best I can do. And so this thing basically has, if you look at this, you look down here, there's essentially no drawdown on this strategy. And I retired when I was 48. I'm now 73, and I've been trading ever since, basically. And so for me, though, I don't plan on going back into the workforce. So I need to make sure that I have strategies that are rock solid and can make me money over and over again. And here is, for example,
for 11 o'clock for my class starting next month. Yeah, they overwhelmingly voted to move from 7:45 to 11.
Good.
So I told them I'm here.
Richard, do you have a question?
I think there was some background noise. I just
Okay.
muted him.
Okay. All right. And here's another case, a situation where 3M came down and it went right back to the open. And I said, when you see something that's pulling back like this really nicely, it's nice to just pop in. And sure enough, you got a little tiny drawdown. You can see it drop a little bit below zero. But here was another $10,000 thrown at a position. And it ended up with, a $140, $146 profit at the end of the day. That's not too bad. I almost always carry an end of day, a close. I'm just trying to do trading through the day just to make a few bucks. And if you start looking at this in terms of applying it to options, you can do the same kind of thing here. Here we go, options. You can do the same kind of thing with options, although your returns are going to be significantly better. So if you look at the price action of SPY, let's go to my radar screen and I'll click on SPY here. And you see SPY through the day was basically, here, I'll blow it up. Friday, SPY was basically flat. It didn't have a lot of motion. It came out, it popped outside of my range here, but it went back in, it went up, it went down. But when you start looking at day of expiration, these things are only a 0.5% moves. It's really, really small. But I've learned to become very good at trading one thing and one thing only, all the things about SPY action. And here is, for example, SPY that same day, right? So here it is coming down, the prices actions coming down. And I said, okay, here's a really nice downdraft. So I basically used my trend line on options. So this is a $535 option. Day of expiration. It's going to expire right here, right at the end of the day in about 2 hours, 2 hours time. So when you do that, you get phenomenal leverage, but you need to be able to be very light on your feet, if you will, so that you can get in and get out very quickly. If it goes against you, you just want to get out really, really quickly. So this price here was entry about 30 cents, somewhere around 30, 40 cents on the option. So that's about $30. So $30 is controlling about $50,000 of stock of SPY. That it's, so you got pretty good leverage there. So that 0.5% movement is corresponding to this movement here. And that turns out to be about a 400% movement. I have 2 exits in here. I have one exit for 50% of my position. For 50% of my position, I take 100% profit. That's my profit target. So what happens when you take 100% profit? You can no longer lose any money. That trade, after this point here, I cannot lose any money the rest of the day. It's basically going to end up flat. And I like that. But what I end up doing too is I also have another target, which is 400%. So I'll take the rest of that position and exit at 400%. So through this day, there are other opportunities in here to make more money and stuff, but through this day, this was a first profit target was 100%. This profit was a 400% profit. And then I decided, well, let's try to do that yet again. And sure enough, you can do it again here. Here it only made 100%, and then here's my day of end of day exit as well. So each one of these things are produce some pretty nice profit. And when you look at the amount of capital you're applying to this, so this applied about $250 of capital, and you made $300 profit on that. Some people wait, years to get that kind of return. I like to wait, this was about 15 minutes that I can do. So anyway, so I'm seeing these really phenomenal profits in a very short amount of time. I deal in options. The implied volatility in the stocks right now, in particular SPY, is down around 12. And that makes it extremely attractive for trading options. And as you see with end of day options or day of expiration options, you can easily see 100%, 200%. The most I ever got back in one day was a 700% gain. That was the exception. But yeah, you can do some pretty good trades there. So let's go back to here. So I said, well, then I'm looking at it and I'm saying, I trade my number one thing I got a Roth, and in my Roth, I trade SPXL. I trade SPXL, and you can see the trades. These are the actual trades here. And you can see my P&L down here on the bottom and the profit for each of the trades. Here's the stochastic comes in and hits. And then you got a nice little profit. It gets out with the adaptive moving average. I'm going to have to look at that one that you put up there, Richard. I'll have to think about that other one that might even be more profitable. But this thing here has been working for me for about 12 years now. So it runs my Roth IRA. I ended up converting all of my IRAs to Roth, and I paid the 30% tax on the conversion. I was trying to do it tax-free, converting a little bit over each time, but my Roth and my IRAs were growing so fast that it just made more sense just convert the whole thing. And so everything I have is in a Roth. So this is basically trading the Roth, and you can see the P&L curves. I get a little bit of drawdown here, but it's not too bad. And this is trading the triples. So, but can I do better than that, right? So I'm always optimizing. So can we do better? Well, let's take a look at what would happen if you just traded. Oh, let's go back to that. So So anytime the stochastic hits in the SPXL, it hits the same thing in SPY, but you'll get 3 times the bang for your buck if you use SPXL. So, but look at this, you got this really nice little upswing here. I wonder how much money I could make in just this little upswing in the first 5 days of a stochastic hit. So I looked at that and I said, well, here is the K stochastic, it's on SPY, and can I see a well, let's back up. To the at the money options for SPY are currently sitting at a price premium of 2%. So if you have a $500 stock, that turns out to be about $10. And if I can get a 4% move, I can double my money. So this wavy line is a 4% move of 5 days from previous. So if you look at, here's 5 days before, here's 4% up from that. So anytime I get a yellow dot, I have the opportunity of basically doubling my money from some sort of entry 5 days before. So I'm buying weekly options and looking at getting a 100% return on capital for trading options. So this is one that I'm working on right now. I haven't done this yet. This is just the observation from this week. And it's like, this is not bad. This produces a pretty damn good return. I'm hoping to get, 30 to 60% per year with my K stochastic, and this will get me that plus in one move. So basically you just stop for the rest of the season. Then the question is, how liquid are these options, right? So if you look at the options, the day of expiration options, I have seen for these options, I have seen 10,000 10,000 contracts traded in 1 minute on SPY. That means that somebody for $50, so for $500,000, they basically bought a position on SPY and they killed it. They knocked it out of the park. So it is available, but then since you are basically doing you have to put in a limit order on it to make sure it doesn't go crazy, because you can get some options like here. This thing at the end of the day went from about 80 cents to $2. So somebody did a market order, and it was dramatic. So you need to be able to control that a little bit. Currently, I'm just using small quantities, less than 50 contracts. So that's not too bad. That stays within the bid ask volume. So anyway, and one more thing here. People were talking always about leading and lagging indicators. There's this thing called a Jenkins cycle. Michael Jenkins wrote this 20, 30 years ago, and I've been using it ever since. And it basically allows you ahead of time to know when the market is going to turn. So you don't know whether it's going to turn up, down, or sideways, but you know that that's the extent of the moves. And this particular one is set at 620 million shares. So it's kind of nice to be able to say, okay, you see the market's heading down. Well, how far is it going to go? Well, it's going to go one Jenkins cycle down, and then it turns. So let's show you that here. It's a nice leading indicator. So back up here, it's starting to trend down. So I said, okay, when is that going to happen? Well, it's going to happen about 4 days from now. And it actually shows here, I've got an indicator that says 6.4 more bars to the end of this Jenkins cycle. So ahead of time how long it's going to be before it turns. it can go flat or it can go up, but you just basically want to set your trades so that they are going to terminate at this particular point in time. It just gives you a little bit of foresight, a little bit easier for me to anticipate what I need to do if I can go out of town or not go out of town and that kind of stuff. So, all right, and let's see. So some of my issues are, if you look at these options and you're trading these through the day, you're not going to get 100%. It's not going to work 100% of the time. Sometimes it works, sometimes it doesn't. Sometimes it just goes back against you, right? So if I would have taken this thing up here and I would have gone up here and said, here's this move, and and trigger to buy, it basically, yeah, it makes the move, but it gets out. It's got this thing where it says if it goes back down to where it started, it'll go back out. It'll just stop. But sometimes it'll just stay in the trade, and you want to just make sure that you don't have significant losses. So what I have been doing in the past is I use a technique called optimal F. And if you guys are so inclined, you can look at Ralph Vince's book, and he talks about optimal F. And so I've been trying to use optimal F sizing on my accounts to get the best return on these kinds of trades. But you're looking at a trade that sometimes can go up 100%, and then goes the next time it can actually go 0, or actually can go to, you lose 100%. There are times some of my executions are actually losing 100%. One more thing, and then the other people were talking about high probability trading. So this is high probability trading on options again, and it if you look at the equity curve, or if you look at the performance report, view performance report, you'll see that the percentage profitable here is 100%. It's called the Holy Grail for a reason. It doesn't lose money, and this is the case in point. It makes a pretty nice profit through the day. This is investing. This Holy Grail is using a total amount of capital of about $1,400, and it ends up the day up about $800. And it's just basically going in and out and in and out and in and out all through the day. And then once it goes, then these are options. So at the end of the day, the option price went to 0 at the end of the day. But so you lost a little money at the end as it kept on increasing its position, but you've already made enough profit to more than carry you for the loss. So that is all I had. Is anybody got any questions, comments? If one of the things I am working on, one of my issues is I would like to be able to do trades during the day using multiple strategies, but the multiple strategies have entries and separate and exits that are only associated with that particular strategy. So I'm starting to change all my strategies so I can blend them all. Here is optimal F. Well, it would have been nice if I could have also put in this trend line thing here and put in this other 400% gainer, so I could have even made more. So I'd like to be able to overlay multiple strategies on top. And in order to do that, you have to figure out ways to exit. You can see here, there's 1, 2, 3 strategies. They're layered. And I would have also liked to put this one on as well, but only exit relative to that strategy. This strategy has the ability to enter and exit. I'd like to be able to have that do only its exits and not exit for the whole strategy list.
So why is that a problem? I mean, you just code it as a separate strategy by itself. I don't understand the
So
issue.
So the issue is you code it as a separate strategy, but I'll show you an example here. I'll show you what I mean. Okay, let me turn this off. And so, oh, wrong one here. This is the Holy Grail. So this is the Holy Grail strategy. So you enter with a bunch of buys. This is the case. This is the buy from, and you name the buy signal. So this is EE1, EE2, so forth, right? And then when you exit, you're exiting from the entry EE1, EE2, EE3, EE4. Typically, what you see in a strategy is you basically buy and then you sell, right? Well, with the Holy Grail, one of the things I found I could do is I can exit my positions on that particular entry only. Does that make sense?
Right.
So I'm starting to write all of my other code with that in mind. So this particular one where I was using this trend line, I'm going to have to go back and write that so that it only, once it enters it, it's got an exit only for that particular strategy label.
Right. And the trend line is a manual trend line, right?
Yeah. Right. Yeah, at this time. So that's another piece of automation that I'm working on to try to figure out a way to do that somewhat automatically because let's see here.
So Ken, because this is Neil, because you have those buys and sells tied to each other by labels, I'm confused because that seems to be the answer of what you were asking yourself. How could I do this? It sounds like you've already answered your question.
I do. So what I'm having to do is I'm having to go through every one of my strategies that I put in place already. I've been writing strategies for
Right.
20 years. So now I got to go through all of my strategies and do the same thing.
Yes, you do have to do that, but it does at least let you tie an exit to a particular entry, not to just any generic entry.
Right.
Got it.
Yeah. And it's a different mindset. It's really a different mindset. And if you look at some of the stochastic things that I've written in the past, there's different exits for this characteristic and this characteristic. And so it really becomes a lot more complicated to do to make it so that the exit is only for a particular individual entity. But in your stuff, Neil, for the stuff that you're doing, I just encourage people to also try to make sure that they exit so that they can layer strategies on top of each other. And I think Sam does this kind of in his stuff. He's got multiple strategies running on an individual equity, right, Sam?
Yeah, I generally do a minimum of 15 strategies on, say, QQQ or NVIDIA or whatever.
Right.
And the basic problem is TradeStation is the only broker on earth that has 4 types of order, buy, sell, short, cover short. Everybody else has only buy and sell, so you can net them in the account. With TradeStation, you gotta net them before you enter the order, and so you can either do it software wise, which is what I do, or you can do it by externally and enter TradeStation back in through their API. TradeStation never ever had an open API because they didn't want anybody to use their software and go to say interactive brokers, which I do as well. So you can take the signal, go out, net it, and go back in through TradeStation API. They have a whole department that would give you a kit for their API. That's the difficult way to do it. Otherwise, you could, there's third-party software that you can use to net your position, but I have my own software.
Okay. Okay.
So it's doable, and I trade 10, 15 strategies on the same. And the advantage of doing it my way is the strategy is still alive, meaning, say the other day, I had 4 longs and 4 shorts at the same time. So my net position was 0 for a while the market was moving up and down. And then at the end of the day, not the end of the day, later in the day, the shorts covered because I cover on a trailing stop, covered with profit, and the long covered with a profit. So there's 2 ways to do it. Or when you're netting, you got to be careful how you want to net, because TradeStation uses the logic what's known as first out. So if you do it on TradeStation, they're gonna immediately apply the first out logic. But if you do it the way I do it, it just hangs in there. Both systems are alive, even though they're canceling each other. On the other hand, they're waiting to close on their own, not on TradeStation first out logic.
Got it. Got it.
Uh,
Hey,
Optiman,
Richard, was it Richard was doing the last one? Yeah, Richard had this thing about some sort of an indicator on radar screen. I would suggest, Richard, to use the K money flow as one of your indicators there. It has it looks at, it does stuff inside TradeStation that nobody else has. It actually looks at the number of buys at the bid and the sells at the buys and bids at the sells and asks. And if you got to go at an intraday basis, but this one would be maybe even another enrichment for your criteria. And it shows here, you can actually see the money flow going in on SPY, and it's much more leading, a much better leading indicator. You can see here the money, the price action is going down, and yet the money flow is going in. And so that to me says that you're going to see a change in the market shape. So if you use it on daily bars, it becomes unbalanced volume, which in my opinion, it's useless. It basically just follows the price action. But if you look at it intraday, the money flow indicator that like I said, it's on my website, I think is superior. So anyway, that's it for me. If there are any other questions, that was all I had to say.
Yeah, can you explain, go back to your channel or trend? What is that based on? These divergent bars, what are they based on?
So it's just this thing here.
Yep. What is that?
So it's just an indicator that I use, which is let's see, what's it called here? What is it called?
And it's based on the open, right?
Yeah, it's basically looked at the open price, and it just says if it stays within these bands, don't bother trading it. Right? And I'm trying to find out where I wrote this a while back. I can send it to you when I find it. but it's just an indicator that
Hmm.
I don't think it's a custom indicator here. No. So it's got to be this one. Trend. Oh yeah, trend from time. Yeah. So trend from time says there's a scale factor, there's an initial time, and there's an initial window percentage. So these three things tell you, so you want to start at the beginning of the day.
Hmm.
Scale factor is just the slope of the line,
Hmm.
and then the percentage at the open. So it just basically draws 0.25% above and below the open.
Hmm.
It says if it's below, above, and if it's within that range, don't bother trading it.
Right, right.
And
But
so I converted that to thing for radar screen, and the radar screen gives me it basically does that calculations dynamically, and it shows me whether it's going above or below that that trend. So here it was going below those trend lines here
mhm.
for AMC. So it was above, but it ended up going below it. So it just allows me to get in and get out really, really quickly at the beginning of the day. And so one of my issues is time management. You know, I've only got like 5 minutes of time to make a decision as to whether I want to do anything. And so radar screen really good because it's coming up instantaneously, and I can just go and sort this. So the normal list is like this. This is my list of stocks, but I can go over here and look at this trend, and I can just say, okay, which ones are going down, and then which ones are going up, and I can set up a stock trade. Here's a stock price point. I basically set up one of these things here, these charts, and it basically will say, okay, you're going to put a price point in there. You're going to go long, short, whatever. It just lets me. I got 2 clicks, but I need to figure out better time management or some better automation to be able to do this sorting and active decision.
Okay. My last question has to do, through the presentation, you were going in and out between 1 minute bar, 5 minute bars, 30 minutes, and daily. So what's your philosophy about the sample rate? I mean, to me, of course, I don't trade options, but to me, the 1 minute bar is just super noisy. But could you address the issue of how do you deal with multiple sample rates?
So I don't deal with multiple sample rates. I'm usually either dealing with 1 minute bars or daily bars.
Okay.
I rarely do anything other than that. So
Mhm.
the daily bars are on my this is daily bars on my IRA, right? And so I don't look
I
at
see.
anything else. This is it. And then I have a little bit of time available, and making $1,000 a day. I mean, it's kind of nice to be able to do that, right? You're sitting here and you run into an option trade, and you see something that looks pretty good, and you get 140 bucks on 100 shares, like, but 100 shares, like, it's like nothing, right? And that's just on the individual equities. And then when you look at the options, that's when it really kicks in. That's when you really start making some decent money. And this automation with the Holy Grail, there's no way you could do that by hand. And it's noisy, right? Like you said,
Right.
it's very, very noisy. But if
Right.
you have automation in place with 1 minute bars, look at this. This is picking up pretty damn close to the bottom, right?
Right.
That's pretty good. And it's using the Larry Williams. So when you talked about percent R, so percent R is percent of range. And so you take that loosely, and you could say percent of range of 2 moving averages, percent of range, or whatever. So what I did is I created a percent of range of Larry Williams circle bar. And if you go back and look at what a circle bar is, and it's looking like basically pivot points. You're looking at pivot points, and you're looking at a band between pivot points. And that's what I use to trade here. So you'll see that these trades are all based on Larry Williams, pivot points. So we're looking at all the pivot points here. And so this is a little buy here, this is a little buy here, this is a little buy here. So it's just again, it's 1 minute bars. I try to go back to options because the return to risk is phenomenal. 100 to 400% per day. I would like to see anybody do that. And it's just a symbol. You just put the symbol in there. It's like trading any kind of equity. You don't have to know anything significant about options except the day of expiration is going to be encoded in here. This is the 24th year, so 2024, and you're looking at the 6th month, 06th month, and 07th day, which was yesterday. And then you put in your call and you want to put your strike price. You put those things together and you're in like Flint, and you let it do its thing. It's just a symbol.
Right.
Ken, Rolf here, I have a question for you. When you put in the symbol for the option, you can't backtest it, right? It doesn't have historical data for it.
So I have captured historical data for the options in the past, and that's what gave me some confidence that this stuff works. But yeah, typically TradeStation, as far as I can tell, throws the data away. I haven't found it anywhere. After a day of expiration, the next day or two later is gone.
Yeah, so your graph here, it only shows it a snapshot that you took that particular time.
What's that?
Yeah, so the graph you show here, is that a snapshot or that's real time?
This is real time. So they haven't thrown this data away yet.
I see.
So this is the 7th. So this was yesterday, right? And then in order to run my holy grail here, what I had to do is I had to say current date -1. So it's basically trading yesterday's date as if it would have been that's what the trades would have been.
Right, and if you tried to put in current date -2 or 3, there would be no data.
Yeah, it'll go back another day after that, before that.
Yeah, but it wouldn't show anything because it would be gone.
No, so this particular option is there, right? So there's the day before, the option is still there, right? So these are, it starts getting really light when it gets near when the option is available. You get very, very little liquidity. And then as the option starts getting closer and closer to at the money, you start seeing much more, the bars look much more filled in and stuff. So you can go back on an individual option, you can go back a week.
I see.
But yeah.
Code for the case stochastic.
Yeah.
So
What
that's
about it? It's there.
on your website, correct?
Yeah. Just go ken.excessprofits.com and then look for the TradeStation code there, and you'll see this is the indicator here, the case stochastic 4E1. I have a version control thing that I use, and then here's the money flow one here that I talked about. So anybody want to download that, they can do that. And then they have the case stochastic. This is the one, this is version 8.8 strategy, and that's what I've been using for the last, I don't know, 8-10 years to trade my IRA. And then there's a video, YouTube video on my channel that shows it's a lab. I put on a lab coat and I go through and explain all the different subtleties about how to run the case stochastic. Okay.
Yeah.
All right, Ken, and you've got a YouTube channel?
Yeah. Because Ken Hoder is the title of
Okay.
the person, and then I have a finance channel, and I have a health channel, and I got a couple others in there.